Hi, this is Randy Finney with Right Side of the Chart. This is a late session update for Thursday, July 21st, 2022. Keep it quick. Really no change in the equity market or my outlook. I still stand by that whole paradigm shift theory where, people are seeing that the sky is not falling, earnings are coming out, showing you that companies, relatively speaking, are still making money and in good shape. Some might, have adjusted for the slowdown, and again, that's being realized in price. So I think that seems to be the increasing narrative. And I still maintain my longer term targets. Short term tactically, and that's again just me booking some profits yesterday and even going short. Told you I'm going to give a little room on those shorts. Today we're up, but that doesn't concern me much because there's 305 right here. That was my target, long-standing target from the reversal back here. And initial target, again, initial just means when I say initial swing target, there were little targets along the way where I think we'll still get a tradable pullback from. And if not, if we blast on through there because it's a full-blown paradigm shift by definition is when the masses all of a sudden realize, like think back in the day when everyone thought, most people, not all, but most thought the world was flat. And then Columbus came back, said, hey, I went west, and guess what? I didn't fall off the edge there. I found this great new land full of riches, and that's a paradigm shift. And, all the cartographers started making new maps, and a whole bunch of boats started going west and from Europe, and that's that. So that's, this is obviously on a much faster scale, but that's what that, what it means. So, look, so we may continue up. And to me, it's just a tactical thing, playing with some house money. It's like going to Vegas and maybe you had a big hit, and then you just say, you know what, I'm gonna, I hit my limit and could walk away, or I'm gonna just cut off a small piece of this right here and just go over and put it all on black 21 or some crazy ass bet. So that's all. And it either works out or not. So if it doesn't, I'll decide not today for sure. That's certainly I'm gonna sit tight. Maybe tomorrow. Tomorrow's Friday. We'll see where we go. And if I decide to pull the plug on that, then I'll just wait for the next objective re-entry, whether that comes on a pullback or it comes on a breakout above resistance if I have to go to cash for a while. So again, that's me. Doesn't need to be you. And I made it clear. Swing trend trading, nothing's changed. I still maintain the, at this point in time, the longer term targets, which are about another 10% or so higher. The downtrend line on QQQ there, this is a daily chart, and or the 200, somewhere in that area. It's kind of a not a moving target. It's a pretty right now set in stone target. But again, I always say the charts are dynamic, and so is my analysis. If we even get there, who knows how it's going to look. But let's go back to the shorter term charts. And this is a 60-minute chart of QQQ. The levels to watch tomorrow going forward. This downtrend line off the lows. Remember, that was one last time we had an objective long entry here on a pullback to it. That's numerous reactions right there. And that's a potential. That would be a deeper target. Certainly possible. Right now, I'm just looking, as I have been yesterday, for a pullback, ideally at about that 290. It's almost 297 or so. Here's a uptrend line to watch right there. 60-minute PPO right there. You can see we still, by the skin of our teeth, have that divergence. PPO is making roughly flat to maybe slightly lower highs, as is the RSI, but higher highs in price. That's negative divergence is still there. And let me show you one other thing. Let's put up a PPO histogram. And one thing I look for in trends are what I call these islands in the PPO. See these big green? This is a red island right there down below. When the PPO crosses over, when it makes a bullish or bearish cross. Here's your PPO, but there's a histogram. And that's usually bullish when you have these big red hills, if you will, and big green hills. These were a couple little whipsaws, but there was our cross bearish right there. And look what happened. That was a trend change or an inflection point. Let me turn off all the levels here. So the PPO is a momentum indicator. So you had a bullish cross there. It wasn't the bottom, but very shortly, with just minuscule, maybe 1% or less, we bottomed, then had an uptrend. That uptrend ended when we had a bearish PPO crossover here. And that gave us a downtrend. That was that big red hill. And so I like, you stay away from that during consolidation periods. You're going to get a lot of whipsaws. It's during these trends you get it. And there's a big green hill right there, define this uptrend. And I said, boom, you had a sell signal, a bearish crossover. You got the next downtrend. That red hill ended there, and we've been in this big green hill since. And we could cross. Sometimes you cross, you get a little whipsaw. But if we do get a crossover, that would confirm we might get another down, and that down could take us to those levels I just showed you there. So that's what that looks like. I could do the same thing on the S&P IWM, but then I'm talking all day long in these videos. So I'm just going to show you that, and then that's also what I'm trading. NQ, this is the 60-minute chart NQ. Just jump back to the 3 months so we can show the target, same target level. So when you look at it here, there's the target about 12,452, and we're above it now. Maybe a little momentum overshoot, or more importantly, think of it this way: if we fail it, this market, I talk about this quite a bit. You almost have to factor into your trading that you're going to, the market makers, the algos, the nefarious forces, or if it's just what it is from the way things happen, you almost have to plan for breakouts. And that's why quite often I'll set my stops far enough out where I think all the stops are cleared if this is just a false breakout move. And again, it might not be that well watched level. This was my level. It might not be everybody else. This was a breakout back here, so we certainly had a breakout and a back test, so that worked. And then again, maybe not, but that's still what I'm doing right now. Is I'm going to sit tight with these shorts for now, and of course nothing big. Like I said, more. If I didn't reverse it short yesterday, I might have just gone to cash. And obviously, in hindsight today, I wish I would have. It's down a little bit, but not much. And you still have this negative divergence on the 60-minute chart right there. So if that plays out, you got an uptrend line. You got 12,1370, which we already hit once. That was the first pullback there. But this is the level I'm kind of eyeing right here, about that 181. And that's comparable to that level on QQQ, or it doesn't happen, or we just continue to go up because that paradigm shift is in full force. Like I said, it was a theory I threw out about a week or so ago, but there's been just nothing but continuing mounting evidence. I will turn the TV on more than I usually do, listen to what they're saying there, and also headlines that are coming through on the markets, and watching earnings and everything else, and first and foremost, price action. That's the most important thing. Not about what people are saying, but what they're doing. And for nearly 6 weeks now, since the lows back on June 16th, they've been buying dips. We've been in an unmistakable uptrend, and yeah, that's it. So let me show you one other thing, and then I'll move on to just a couple more trade ideas: nat gas, crude oil, and whatever else I need to hit on. So here's a response I made today, and I'm only sharing this just to, again, kind of let you know my mindset, right or wrong. Question put to me: what are the chances that we continue to drop to or through the previous lows? So here's my response. Like usual, long-winded. You know me. I don't just, because this game that we play, trying to figure out the markets, it is extremely complex. There are an infinite number of variables, and so I'm not just a simple, mechanical trader. Okay, we broke out here. That means we're going up. No, there's a lot more, a lot that goes into my analysis. So my answer was, if you're referring to the June 16th lows, which I assume it was, there are two answers to that question. Number one, as the question was asked, I would say the chances are quite favorable we take out those lows. Okay, that's answering the question. Two, the more detailed response is, I think the odds are relatively low. I'd say between 30-35% that the market drops from or around current levels, which is, I think, what this member was meant to say. So I think it's pretty low that we're going to drop anytime soon and take out the lows in the coming days to weeks, that is. As of now, I think the odds still favor more upside in the coming weeks and possibly months, maybe another 10% or so of this current bear market rally, followed then by the next leg down within the larger bear market that started back in November lows. So that's been, has been, and hasn't, I'm waffled on that, my scenario now for 5 or so weeks. And I went on to say my thoughts can and likely will change if the charts convince me, but as of today, that's my preference, or I meant to say preferred scenario, same as it's been for about the past 6 weeks. So, all right, that's that. We'll see where it plans out. And remember, trade diversified. So now let's talk about some other trade ideas that have been thrown out there recently. Crude oil, the most recent crude trade was and still is a short, and this is I'm zooming in nice and tight. Remember, I initially posted accidentally posted the August, which we're still trading then, but we're about to end. So they've ended trading. Remember, the on crude, your August contract stopped trading the end of July. The September will stop trading end of August. Don't ask me why. It's how quirky it is. You trade futures, you really got to know your contracts. But so that was our short. Was at the downtrend line and 101 resistance level right there. If you missed it, you had another shot at the same exact thing, 101 in the back test of the trend line. Again, primary downtrend line. Went on, we hit our first target, hit our second target, followed by reaction, and then I followed up with that post today to tell you I think it's, if you covered, took profits there, objective to get back in because support once broken, 97.89 becomes resistance. I also don't wait for a full back test of $97.89. I will short early, which is why I got that post out to you. And so far timely. We'll see if it pans out, and that's for a swing down to that next target there, which right now is the final target about just above the 92.11 support. And so if you look at today's price action, then you can see that was where that post went out. So good for about a 1.5% drop so far, but work to be done. Maybe a little trend line here. Not crazy about it. Little minor support. This is just a 1 minute intraday chart. I'll look at these things to kind of micromanage positions, but this seems to be some little minor support there, about 96 and change. If we could take that out, that should open the door. But again, this one's being traded off the 60-minute chart. And then on a related note, yesterday I told you back in a natural gas short again, as expected. And right after I said that, I was talking about the reasons why, and the headlines came out, was it this morning? Just as I said, Putin opened up the pipeline. And I told you he will not, he's getting away with what he's getting away with now in Ukraine because he's, Europe's complete and utter dependence, especially Germany. It's a big industrial nation, and they cannot function without Russia's natural gas. So he knows that, and he wants an all-out. He really wants the West against him, or the the EU countries shut off natural gas completely to him, and yeah, you'll have your war there, buddy. He knows that. So anywho, so whatever. It's nothing big so far, but a perfect reversal. I said yesterday, 8069 is big resistance, and that's where you had, if yesterday we're a little below it. You got that level today almost perfectly. You look at that. So you've got the rally right into that resistance level there, just about above the $8 level. You've got big negative divergence that's been building for a while now, and it's starting to steepen here. You have now, look at the PPO and RSI falling off, and this is one target potentially, the bottom of this channel right here, 7,380. Maybe I'm going to take that line and walk it up a little bit higher there. I'm going to call it, if you're looking for a quick drop, 740 or so. And then 7024, you can see the numbers there. So that's NG, or you can buy KOLD if you want to use an ETN, or just short UNG if you don't want to deal with any decay from the leverage. Nice pop in the metals. I got out this GC chart here this morning. We were down here somewhere. Right after I fired off that post, we had a nice leg up. Remember the ECB, as I expected they would. I told you there's always reversions to the mean. You're not going to continue to see the U.S. hike, and ECB not. There's implications where currencies, when there's too much of a movement between major currencies, things start to break, and then there starts to become concerns. With the U.S., it's going to hurt our multinationals. Export prices get higher with the strong U.S. dollar. Anyway, so there's we got a 50 basis point rate hike to take rates out of negative territory from the ECB. Still not fully reflected in the charts of the euro, but I think it'll continue to be. There's still more upside for my targets. So gold's looking good coming up there. And anyway, so that's that. Give you those targets. Silver, of course, you usually get more bang for your buck. Not always, but usually. And the miners and the other metals will follow as well. Ultimately, palladium's up, platinum. They've all rallied off that news. So I'll go over those for you real quick. Need to find it. There's silver. There was that nice up this morning, up to that first 17 nine. I don't know. Maybe I didn't get that one out to you guys today. These are the levels I have: 17, 18, 792. Platinum. That one I gave you was a trade idea right here recently. My first target was this downtrend line, and we hit it. We went from there. We made an ever so slight marginally new low. So as long as you get these divergences, they just get bigger and bigger. You get a bigger move. So well within any reasonable stop, because that was and still is my current target for this swing trade. So we already hit T1 for about a 5% gain. And if T2 here, which is 878.35, gets hit, that's going to be about a 7% gain. And if T3 gets hit, that's going to be about a 9% gain right there, 896.59. And in Bitcoin, I told you yesterday morning, because of the fact that I was looking for a pullback, which we got. It was minor, but we got the pullback, and the initial pullback in the equity markets, also in Bitcoin. Told you I'd take that. Just wanted to get out and then buy back into Bitcoin, and we did. We got that nice. I think I gave you yesterday this level right here. I'm gonna go down to a 1 month chart. 22,980 plus the uptrend line. We hit that yesterday right after that video. Bounced off. It got an initial bounce. Went down below it, but we're coming back to back test from below. So Bitcoin, the other cryptos, again, they are a risk-on asset. The markets are rallying today, and therefore so is Bitcoin. So it was just a pullback, a correction as expected. Still longer-term targets to be hit. And, the other proxies, you trade the ETFs, ETNs, or ETF type instruments, and that's GBTC for Bitcoin. There it is. There was that little minor uptrend line broken, and you still have pretty good support here. So even if there's another leg down, which I suspect there could be, because the markets may go down into tonight or tomorrow, get a little more pullback, that would be a good buying op if you missed it. Still looking for a move up here at about 1797, and on that daily chart you can see big old gap to be backfilled here. And if things really get going, you could hit this downtrend line right there, the primary downtrend line. I know I've got a gazillion lines from old trades and old levels here, but that's that. And then the other ones, Ethereum, I've covered. ETH, the crypto itself. I had that massive, well, not to me, it was massive, big breakout of that beautiful basing pattern right here, that trading range, bounce, 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 broke out, gapped above, and that's also what I covered yesterday. We had hit the bottom of the gap right there. There's the top of the gap above. I think we'll backfill it fully sooner than later, even if we come back. And if we do come back, 1274, if we get a back test, it's going to be objective to buy. And if we happen to take out the trend line, that's why I've had this level here, 2248 is a possibility. And on that too, you have ETCG and ETHE. Somebody mentioned, hey, can you put up a chart I do cover ETHE all the time. It's been covered in a lot of videos, even recently. Just I didn't cover it in the last couple days. But ETCG, remember, hit that 981 resistance level. Pulled back here to 843, which was a former target, now support. That's following the wedge breakout there. Will probably work its way higher. One member asked for ETHE again. The last update I gave you on this one was when we hit this trend line. I mentioned we were back testing the primary trend line. There's more volume in ETHE, but it's a hair above it. And really what you want to see it hold, there's support here. Worst case scenario, you could get a backfill of the gap, and that would provide an objective long if the charts are still constructive. So just keep things light for right now, and maybe heading into the weekend. I think over time these cryptos can work their way back up. ETHE could rally up here to that 1858 target. And what else do I have for you? A couple small positions I took today. Lumber and corn. Lumber, I've been watching this level right here, this 603 70-ish support, and we hit it this morning. There was a positive divergence I've been watching forming here on the indicator. So you have divergent low at support. Take that all day long. If the gap's below, stop will be somewhat down here below this. There's a little bit of the next support. Let me add it. It's visually I can see it, but it's right about right there. I'm going to keep it tight. If it goes down to that level, we're probably going to take out the divergence. So I'm going to keep a tight stop if it goes down below the lows. And I'll add to it if we can break above the trend line and for the next leg up in LB lumber futures. There is not, to the best of my knowledge, or hasn't been an ETF or ETN that directly tracks lumber prices. Only the wood and cut, which track forestry and timber companies. The other one that I'm nibbled on today is corn, and ZC, or your corn futures, may have a little more downside, but I think the RR is starting to look good from here, the risk reward ratio. Let me make sure this one's up to date here. You've got, this is a 60-minute chart. You have a little bullish falling wedge pattern down here. You have positive divergence right there, and these are the potential targets. I think you can see 607 and 3/4, 621 and a half, 647 and a quarter, 661 and a half, and then 689. And corn, CORN, easy to remember, is the ETN, and that one's pulled back to this support. It's a pretty nice support. You had a major reaction high back here from early 2021. You broke out there and you back tested it, and then you back tested it here, bounce, and you fell to it again. So it could come, it's more of a support zone that runs down to 2273, so maybe a little bit of downside, but you can see some divergence. You got a little bit of positive divergence down there. Not big, but it is positive divergence. We have now equal lows and prices, and if we make a slightly lower low, two are around that support level, maybe worst case down here at about $22. So more of a soft buy for me than a hard buy, especially because there's no buy signals yet or breakout on that 60-minute chart. Just wanted to mention that. And then wheat and corn tend to move together, and so wheat's still just above the also its primary uptrend line right there. I threw that one out the other day. So that's it. It's not all inclusive, but those are the things I'm watching. Precious metals, the grains right now, lumber, and we'll see what the stock market does. Looks like it's going to close red here. I'm sorry, close green in a few minutes. And if it can continue to build on these gains, the odds for a false whipsaw diminish the farther you get away from the breakout point on QQQ. Remember, which was pretty much that we took out that gap there, and we're now into this. This is that area of consolidation I looked at there, and that's a pretty solid candle. So yeah, I'm not going to give this one much more room. I'll just wait for the next objective entry. I'll take these shorts home tonight, and then that's it. And they gap up tomorrow, or I'll just set stops. I'm going to do OCO stops, which I always do before I go to bed. One cancels the other. If they take me out, so be it. I'll re-enter strategically. And as I told you, I have not. I took some profits off in the long-term accounts, but I still have a net long positioning there on the equity markets. A lot of tech stocks and just high growth companies. Things, and actually a lot of different things. I've been throwing out a ton of different trade ideas lately in different industries and things like Shake Shack and things like that, and weird stuff, and pot stocks and everything else. All right, guys, I'm going to wrap it up here and get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.